Name and shame a pension fund Tuesdays. I'll do this every Tuesday. This Tuesday, we've chosen Baillie Gifford's European Growth Trust. Sounds good. Baillie Gifford, big name. Okay, they manage as a company billions. European. Hey, come on. Europe has been doing actually relatively well because it's not America. There's been a lot of money going into Europe. It's also been a laggard. It's been seen undervalued, and it's been chugging along. And it's diversified because you've got all of those European countries all at different economic growth paces. So sounds good. Growth. Hey, fantastic. Doesn't that sound great as well? So Baillie Gifford, European Growth Trust. Time to name and shame, I'm afraid. Now, let's look at performance. And let's give it quite a bit of time. Let's give it 5 years. How has it done over 5 years? And we'll look at shorter time frames, just in case, 5 years, you might think, well, that's really unfair, Alpesh, because doesn't that include a bit of COVID or something? Okay, so over 5 years, you're down 23%. Now, of course, you wouldn't put your whole pension in just one security, but you'd think a big name like this would do better, wouldn't you? 23% you're down. You've lost pretty much a quarter of your pension. Well, that might be because the index against which it measures itself is lower. Well, not so. The IT Europe index is actually up about 25%. So there's a 50% gap. Okay. How about the past year, Alpesh? Come on, we've had a massive bull market run in the US, Europe. I mean, come on. Even the UK, which you wouldn't count as Europe, even the UK is at all-time highs. Well, over the past 1 year, you've got a 5.9% return. So I know through something like Flagstone, I can get about a 4% return on my cash. So, okay, they gave me 5.9 over the year. I think I'm being fair when I say, look, there's a lot of measures on which this is pretty bad. So what did they invest in? What was so bad? Well, let me tell you what their current holdings are, because that will give you some detail, I guess, into what the heck's going on. So if I look at their current holdings, yeah, okay, look, the current holdings aren't necessarily so bad, but it just shows you why you might be better off learning to do these things yourself. Okay, so ASML. Software company, 5.88%. I suspect they got into this belatedly. All right. Their number one holding, nearly 10%, is a company called Bending Spoons. Worries me to begin with. Okay, they've got Roche, Ryanair. They've got Adyen, the payment company. Okay, not too bad. I think it's a fintech company. Novo Nordisk. Okay, that took a hit, but they've got under 3% in it. So that's, not bad money management. I'm afraid the bottom line is just basically that some of it's bad stock picking. And that necessarily happens with large funds like this, which you don't realize, is there's very few companies they can invest in. They don't have the same range you have as a private investor because they've got so much money that, think about it, they could, if they're going to put 10% of their capital in a company, they've got to make sure that when they buy it or they want to exit, they're not going to crash the whole company or take it over to begin with. That's why they end up with the big companies. So you might as well, okay, that's fine. I don't mind having big companies. Yes, but it's really narrowed the range. It's like somebody saying to me, I want you to outperform the S&P, but you can only pick from these 10 companies and I want you to do it with less volatility. It'd be absolutely bloody insane. In fact, I did have somebody ask that and I said, yeah, okay, and I'll make an Elon Musk rocket as well while I'm at it. So these companies have their hands tied, these big players like this. So, I mean, that's it in a nutshell. And it's in a way, it's not naming and shaming in the sense of saying, look, they're incompetent, they're negligent. I guess the worst thing is that people continue being fooled by the big name and the narrative of the title. And they think, oh, it's a big name company, it must be okay. They've got a smart looking a fund manager, some chappie who went to the right universities. Surely my money's safe with them. After all, they're experts. And this is the problem. That happens all the time. And they'll tell you things like, okay, and they only have two managers. All these big funds play it cheap. And they'll say, oh, he joined the company in 2012. Oh, let's have a look. Let's guess. Was it Oxford or Cambridge he graduated from? I'm just going to pull up which one of those two it is. Come on. Oh, I can't find it. It goes, he graduated and then it stopped telling me. So I'll have to just look on LinkedIn. I'm not going to name the individual. It's a bit unfair. It's not his fault. If you're getting paid the kind of money he's getting paid, you wouldn't tell your clients that you're not doing well, would you? either. Yeah, I'll cut him a break on that one. Look, for the money, just ask Mandelson. You'd do things, wouldn't you, that normal individuals probably shouldn't do, such as, you really should tell your clients, oh, it's Oxford, I found out. It's Oxford. There's a surprise. Okay. And he graduated in, oh, how useful, music. Graduated from music. Was at the, yeah, great. That's very useful. I'm sure there'll be some link to asset management to graduate from music. You know what it is? I mean, symphonies, I don't know, mathematics, harmonies. Anyway, good luck. We've named and shamed another fund. Why they don't tell their clients, listen, guys, don't invest with us. We've been performing poorly for a very long period of time, and you really shouldn't have your money with us, because our hands are tied into a very small universe of just European companies and the large cap ones at that. So we're taking a punt on 10 names. No wonder we're underperforming. Sorry for those of you who are in that Baillie Gifford one. I'll do other Baillie Gifford and other ones such as L&G as well. And if your wealth managers put you in it, hey, time to pull out the gun. Okay, that was a joke. If you like these and want more of these, please do like and follow. Have a look at campaignforamillion.com. I've written 200 columns in the Financial Times. You don't know who I am. I was a visiting fellow in business at Oxford University, where I lectured on behavioral finance, a bit more useful than music when it comes to, well, finance. And 18 books published, amongst others, by the Financial Times. Hedge fund manager. We've also got a private equity arm, which my partners take care of out of Zurich. And I'm just lifting the lid on what really goes in finance because, well, I can lift the lid. So hopefully retail clients, private investors learn to take care of their money themselves and educate themselves a bit better. So if you do like all of this, let me know. And I get one hell of a kick out of it as I get older. Grumpy old man syndrome, I guess. Thank you all very much. Have a look at the link in the bio.